Hey all, welcome to ShareTreck. It is 24th of April, it's a Sunday, and I want to take just a minute to thank all of you, all the 400 plus subscribers that we have here for all your kind support, encouragement, and collaboration through the comment sections, for helping me gain the confidence and the ability to continue with this channel on a daily basis with daily updates, on weekend with weekend specials. So I really thank you. You have been able to motivate me and help me learn how to put my thoughts into video and maintain this channel. So this channel belongs to all of you, and thanks from the very bottom of my heart. Having said that, our topic for today is going to be whether CRISPR Therapeutics or Beam is a buy now. And in this process, I'm going to be talking about the individual merits of both these companies. And you already know that we are working in a tight monetary situation, which is what the subject matter of yesterday's video was. If you have not seen it, please go and have a look. It talks in detail about why we have a bearish market right now and when we are likely to bounce back. Having said that, let's get started. The idea of doing a video on CRISPR and Beam right now came from one of the subscribers. In fact, the subscriber had asked for Editas also, but I think that Editas at this point of time is not worth putting much of efforts on because CRISPR and Beam are way ahead, and I will take Editas separately. I want to do a little more research on that. We'll have a separate video on that in the near future. But for today, we are going to look at CRISPR and Beam. One of the factors that also led me to make this video is that if you had noticed the price action yesterday, despite the overall market being down, CRISPR and Beam were slightly positive, and there were a few other genomic shares which were slightly positive, and the common factor among all of them is that their earnings call is approaching very shortly. CRISPR is reporting on 11th of May, while Beam is reporting on May 17th. And both have leading sickle cell therapy in or about to enter FDA clinical trials. That's the reason why we are seeing a bit of a positive move out there, in my opinion. And we're going to examine this in detail today. To begin with, let us get the expectations out of the way. The street expectations for both CRISPR and Beam is likely to be as follows: EPS of 1.94 for CRISPR and revenue of 5.67 million for CRISPR, whereas for Beam, it is expected that Beam will report EPS of minus 0.66 and revenue of 50.45 million. So that's the expectations. And also the expectation from my perspective is that CRISPR and Beam is likely to firm up approaching earnings day because there are a lot of items on which there is a potential for some positive news that can help firm up the pricing. That could be the anticipation. Having said that, let's look at the CRISPR pipeline to get started. So when you look at the CRISPR pipeline, you have CTX001 in the clinical stage. This is the hemoglobinopathies section. The other section is immuno-oncology, in which we have three candidates: CTX110, CTX120, CTX130, all of them in clinical stage. And in regenerative medicine, we have got VCTX210, which is a collaboration with ViaCyte. That's also in clinical trial stage. So let's have a look in detail on each of them, and you will understand why there could be some potential good news in the earnings report coming up on 11th of May for CRISPR. Now, apart from the fact that CTX001 is in clinical trials, we have two wholly owned CAR-T investigational therapies, that is CTX120 and CTX130. And the company expects to report top-line data in the first half of 22 for these the trials on these two therapies. So that's another aspect where we might probably hear something, and that could provide a kind of boost in the market. That's probably another anticipation that we can have. I'd like to get back to the pipeline again and fill in more meat into this. So with regard to CRISPR Therapeutics, as on February 20, 2022, that is earlier this year, more than 70 patients had been dosed with CTX001. Target enrollment was achieved in the ongoing clinical trials for CTX001 in both TDT as well as SCD, which is thalassemia and sickle cell disease, with planned regulatory submissions in late 2022. We may or may not hear something about this in the earnings call, but if we did hear, hopefully it's a good news, and it could probably boost the share price a little bit, but there's good potential out there. The other aspect is CTX110. CRISPR Therapeutics had begun dosing patients in the trial of CTX110, its wholly owned allogenic chimeric antigen receptor T-cell investigational therapy, which is targeting CD19 plus B-cell malignancies. So CTX110 is created by making three modification to healthy donor T cells, adding chimeric antigen receptor, that is the CAR, into cells and knocking out TCR and MHC1, which would allow treatment to be used off the shelf. At the end of last year, the company published phase 1 trial result, which showed a 58% overall response rate and 38% complete response rate in the large B-cell lymphoma after a single dose of CTX110. Maybe we could hear something more about this in the earnings call. That could be a potential positive catalyst. So I'm anticipating to hear something about that in the earnings call. As of last reporting, enrollment was ongoing and the company expected to report additional data in 2022. The US FDA granted a regenerative medicine advanced therapy designation, that is RMAT designation, to CTX110 in November 2021. Since then, we have had a few months to mobilize everything. FDA generally does not grant RMAT designation if an IND is in hold or is placed on hold during the designation review. So this is good progress, which means we are progressing ahead. There are no roadblocks at this point of time for CTX110. The pharmacokinetic data provide a strong rationale that consolidation dosing can improve on an already competitive profile for CTX110. So the 58% overall response rate and 38% complete response rate was based on varying dosages. So consolidating the dose and playing around with the dosage would probably give even better results. And even the 58% and 38% we have right now is way better than what is available in the market with alternative therapies. So based on safety and efficacy profile, the company has expanded the current trial into a pivotal trial that incorporates consolidation dosing and has begun dosing patient in this pivotal arm and expects to report additional data in 2022. They haven't mentioned when in 2022, so potentially we could hear a snippet of information about that today. Maybe they have something positive to report. We don't know. So that's another potential for boosting the price of this share or giving a positive sentiment for this company in the market. CRISPR Therapeutics has an ongoing phase 1 clinical trial assessing safety and efficacy of several dose levels for the following CAR-Ts, that is CTX120 as well as CTX130. Both are wholly owned CAR-T investigational therapy. And the company expects to report top-line data in the first half of 2022. We are in the first half of 2022. We have finished the first quarter. So we should expect to hear something reasonably about CTX 120 and 130. And if it's a positive thing, it's going to be great for the share. So having said that, we have VCTX 210 for type 1 diabetes in collaboration with ViaCyte, which is also making some steady progress. On February 2, 2022, CRSP announced that they dosed the first patient for type 1 diabetes clinical trials. This is the first in human trials, not inhuman in a bad way, but as being done on humans rather than on animals. So this is another great milestone. At the earnings call, we should expect to get an update on the above milestone as well. So as you can see, we have a lot of surprise packages in CRISPR. One of them could be opened in the earnings call, and that can probably be a positive news that could give us a positive momentum in the market and confirm our suspicion that CRISPR is a leading genomic company, which is most likely to be the first one to monetize. In terms of financial expectations, all we have is the data that we got from their annual report last year. And we know that a good portion of their increase in cash position was because of the upfront payment of 900 million by Vertex. That contributed to a good bump in its balance sheet. And additionally, 250.9 million was from issue of common shares. I had not noticed that earlier, to be honest, and I think we had to keep a close eye on equity dilution when it comes to all these companies, because equity dilution can also account for a fall in share price if more and more shares are being issued. So let's watch in this current earnings report if any equity dilution any further equity dilution has been taking place. Let's turn our attention to Beam. And when it comes to Beam, here is their updated pipeline. This is what I took from their website just last night. And you can see that their leading candidate is Beam 101, which is just about completed the IND enabling stage. Earlier this year, we heard from Beam that they have been approved for IND and they're moving on to the next stage. So I'll talk more about that subsequently. But you can see that Beam is not as far ahead in most of its pipeline items as CRISPR. That's why I have a great deal of optimism about CRISPR. I think it's at the very forefront because it has got many candidates in clinical trials. It's moving very, very fast. So CRISPR Therapeutics, I think, is still leading. Beam is a distant second, in my opinion, because we need to see progress on sickle cell disease, and they need to get into clinical trials. And there are always hurdles because all these FDA trials have got failure rates and success rates. And it's not guaranteed that everything that gets into trials is going to come out on the other side FDA approved. So the risks are there both for CRISPR and for Beam. But since CRISPR has got many candidates in there, the probability of one of them succeeding very shortly is much higher than it is for Beam, which has got just one candidate which is just about to enter into clinical trials. So in my opinion, I think Beam needs to speed up their activities. They have been excellent with marketing, but they have to focus equally well on execution. That's my thoughts. And in terms of reasons for optimism, I would say that some of the news that we may probably get in the earnings call that could generate optimism are the fact that the first subject anticipated to be enrolled in Beam 101 phase 1 of 2 clinical trial for treatment of sickle cell disease is going to be in the second half of 2022. So they could probably come up and announce something about progress made in that direction. So they are still in the stage where they're about to announce selection of people, whereas CRISPR is already in clinical trials. They have dosed people. So that's where CRISPR is still ahead. Beam plans to submit an IND application for Beam 102 in second half of 22. Again, it's an IND application that's going to happen in second half of 2022. And for Beam 201 also, it's the same, second half of 2022. And also Beam anticipates IND enabling studies for Beam 301 in 2022. So they have left it broad. They're not even saying second half. So who knows, it could be possible that they're doing it in the first half. So that could be some news on any of these candidates that is positive, and that can give us some reason for optimism out there. But overall, even though Beam is poised for great things, it's all in the plan stage right now, and we are not seeing as much execution as I would like to see. Further, they have this 4-year research collaboration with Pfizer, which was announced very recently. The deal value is up to 1.35 billion. Beam may opt into global co-development and co-commercialization agreement for one of the programs that they would jointly work with. And the focus on therapies for patients living with rare genetic diseases is at the core of this collaboration. So there's plenty of synergies between Pfizer and Beam because Pfizer brings with it a lot of experience on the development of drugs and therapies. And they also have experience with CAR-T therapies and other forms. So the collaboration is really synergistic and can produce a whole lot of positives for the company. Maybe we hear something positive from this area of operations of the business, and that could be a catalyst for more optimism. Having said that, I want to go back to the pipeline and add some meat to what we have out here. So in terms of talking about Beam 101, Beam 101 is a patient-specific autologous investigational therapy that incorporates base edits designed to mimic single nucleotide polymorphisms seen in individuals with hereditary persistence of fetal hemoglobin. Beam 101 aims to potentially alleviate effects of mutations causing sickle cell disease by leading to increases in fetal hemoglobin, which inhibits hemoglobin 5 polymerization, which causes SCD. They have called this set of trials as a Beacon 101 trial in phase 1 of 2 clinical trials designed to assess the safety and efficacy of Beam 101 for treatment of sickle cell disease. This Beacon trial is expected to include an initial cohort of 3 patients treated one at a time to confirm successful engraftment, followed by dosing in up to a total of 45 patients. Beam has begun site selection and institutional review board approval process for trials and plans to enroll the first subject in the second half of 2022. Recently, on January 9, 2022, we saw a press release from Beam which said that they made significant progress across their base editing portfolio in 2021, which culminated in US FDA clearance of the first investigational new drug, that is IND application of a base editing therapeutic Beam 101. In other words, in January 9, 2022, Beam announced that they got IND designation for Beam 101. So they can go into clinical trials. Now they can ship their therapy across to research centers where clinical trials can be conducted, and that's what it means. The sister product, Beam 102, is designed to treat sickle cell disease by directly editing the causative HB5 point mutation to recreate naturally occurring normal human hemoglobin variant called the Makassar variant. The Makassar variant has been reported to have the same function as the more common HBA variant and does not cause SCD. Beam plans to submit an investigational new drug IND application for Beam 102 in the second half of 2022. Now, when it comes to the rest of the pipeline for Beam, they are all in a very nascent stage, and I don't think I would like to invest more time going through them because we want to keep this video short and to the point. Around 25 to 30 minutes duration. But we can do a separate video on Beam in a subsequent day. But right now, I think I would like to go and look at the financial expectations. From their last earning report, we know that for the fiscal year ended 31st December 2021, Beam Therapeutics Inc. revenues increased from 24K to 51.8 million. Net loss applicable to common shareholders increased 89% to 370.6 million. Revenues reflect an increase in demand for the company's services. Beam has been excellent in marketing, and I think that's going to help them if they come in second behind CRISPR Therapeutics with their sickle cell therapy. They would not only have 2 therapies, but they have a strong marketing culture. So they would be able to kind of overcome the setback that they have for being second off the gate if that happens. So that's where I'm still optimistic about Beam. Higher net loss reflects research and development. So one of the other things that I noticed is that at this stage, when we compare CRISPR Therapeutics with Beam, CRISPR has got multiple pipeline items going on simultaneously, just like Beam, but most of them are in the clinical stage, clinical trial stage, whereas when it comes to Beam, they are not yet into the clinical trial stage, and many are in a very early stage. So one of the fears that I have is probably Beam is spreading itself thin into too many programs in a very short period of time, and maybe from a financial perspective as well as from a talent perspective, they are spreading themselves thin. So the risk factor becomes slightly higher for Beam, in my opinion. Of course, things could be different. We don't know everything that's happening in Beam, but from my perspective, that's what I think. A strong cash position of 1.2 billion, including Pfizer collaboration deal, is giving it a lot of resilience. But we'll have to wait and see how everything pans out, given the huge range of pipeline items which are still in nascent stages. So to summarize the financial expectations that we have, the street view is that CRISPR should report $1.94 as EPS and 5.67 million as revenue, whereas Beam is expected to report EPS of minus 0.66 cents and revenue of 50.45 million. We can check and see whether this is met when they do their earnings report. If you look at the balance sheet at this point of time, there are so many items in the balance sheet of both Beam and CRISPR. Even if you look at it on a quarterly basis and try to extrapolate what's going to happen in the first quarter of 2023, it's very difficult, because in most of the companies, you can estimate a whole lot of information from their past record of sales, from the past record of the cost, generate the margins and all, and project forward. But in this case, it's a highly technical field, and they are working on therapies which are in clinical trials and all that. So the visibility that we need and the expertise that we need to have any reasonable projection in this quarter is very, very limited. So I would stick with the street expectations on this and take it from there. So that's the overall financial expectation. Here I have summarized my conclusions. CRISPR Therapeutics is ahead of the game in sickle cell disease at this point of time. CRISPR's execution is fast and has many therapies in clinical trials, so it's a much more ripe company in terms of being much closer to monetization. CRISPR may now begin cash burn at a faster rate. That's what I'm expecting when they report this quarter, because they have got all these clinical trials going on and many other items in their pipeline. They would be spending at a higher rate in order to meet various deadlines and try to bring their therapy to market at the earliest. The make or break point for CRISPR, in my opinion, comes from the FDA verdict. So among their 4 candidates that are there in the trials, if FDA approves any of them, and that is the first decision that we hear from FDA on CRISPR, then that's definitely going to unleash the share price. It will run up like a wild horse. However, if the first verdict that comes from FDA happens to be not an approval, then that could put some amount of weakness on the share price until any of the other therapies are approved. So that's what I mean by make or break point. When we come to Beam Therapeutics, Beam has a strong collaboration agreement with Pfizer for 4 years, just like CRISPR has got with Vertex and ViaCyte. And Beam is very good at marketing its services and expertise. And that's the reason why I think that even if they end up coming second with sickle cell disease, they would have 2 sickle cell disease candidates, and they would be having a great deal of marketing capability in order to push it forward and gain some market shares and overcome the disadvantage of being second. However, if they ended up being the very first to come up with sickle cell disease approved therapy, then they would be really making it difficult for anybody else to get market share. And we should remember they have 2 candidates for sickle cell therapy. Even if one of them succeeds, they still have a great opportunity to capture the market share. And also the thing that concerns me a bit with Beam is that they seem to be slow on execution and they need to speed up. That's my feeling. However, when I look at CRISPR Therapeutics pipeline at this point of time, I can't but help think that at some point of time, CRISPR's pipeline would also have looked like what Beam does today. So maybe Beam is just a phase behind, maybe a few years behind CRISPR Therapeutics, and maybe a couple of years down the line, Beam will also have a whole lot of therapies in the clinical trial stage. So I would give that to Beam. And both companies have sufficient funds for collaboration, as we observed. So they are the front runners. And in this particular environment, which is totally bearish, and I'll refer you to my earlier video that I did yesterday on why Genomic shares are languishing and when they will turn around and go up in stock price. You can check out that video for the reasons why everything is bearish and when things are going to be better. But at this point of time, there are 2 options for CRISPR investors. I'm talking about long-term investors, not day traders and not swing traders. We should look at CRISPR only as a long-term investment. And again, I would recommend that don't put everything in the kitchen sink into it in terms of investment. Put a portion of your portfolio, not everything. And there are 2 strategies that one can follow. dollar cost averaging on the way down from here, assuming that the bottom is not too far, or dollar cost averaging on the way up. Personally, I would prefer to do dollar cost averaging on the way up because I don't know how low things can go. For context, look at Tesla, which recently came up with a spectacular results, which blew the mind of the market. It is still below its all-time high. It could have been somewhere around 1,250 in my opinion, but it is still under 1,100 at this point of time, despite such great results and despite being a leader in its market segment. And despite the fact that they have these gigafactories and everything which was built in low interest environment and giving them great cost advantage and therefore greater margins, still they are not able to command the price that they did before they had all of these things in a different market. So our market is very pessimistic. So it's very, very reasonable to understand why genomic shares are languishing, basically because there is a high risk factor. All the four items in the clinical trial stage for CRISPR could fail. The two items that Beam has in its pipeline, which are heading towards the clinical trial, could fail. Anything could happen. That's why there is a lot of risk in genomic shares, and the market environment is currently risk off. So be careful and consider your own situation, do your own due diligence, and decide which strategy you're going to adopt. Dollar cost averaging on the way down or dollar cost averaging on the way up. My choice is on the way up because there's going to be lesser risk out there. And I'm hoping for the best for both CRISPR and Beam. You please let me know what you think about this video. If you like the video, don't forget to press the like so that YouTube can show this video to many people and they can discover our channel. And if you are a subscriber, I really thank you, as I did at the start of this video. And if you're not, why not? Just subscribe. It's absolutely free. Join us and become a part of the CRISPR community, and we'll try to get you everything related to CRISPR in this channel. Thanks and have a great day and have a great weekend. Bye for now.